Hi, welcome to Let's Talk Bonds, the fortnightly podcast from NIIF Bonds. And in this edition of Let's Talk Bonds, we have a very interesting and very important guest for the whole bond market in general. It's Amit Ruparelia. He is the director of in NIIF Treasury, in charge of raising funds for the and also for the asset liability management of NIIF. Now, NIIF has been one instrumental in encouraging and investing in infrastructure in the country. And their mandate itself is very, very important to the bond markets. The only way they can raise funds is by issuing bonds. And given that they are such a very important entity to the government in its CapEx program for infrastructure, and also to the bond markets in general, because you have a very steady issuance of bonds from one of the most credit safety entities in the market. And it could also mean that it has a lot of savings potential for investors across the country, either through institutions or directly as well. However, I will leave that to Amit to explain the whole aspect of NIIF, because there are a lot of intricacies involved in this, and how they work and what is the potential, and how bond markets can develop with the help of NIIF. Thank you, Amit, for attending the podcast and being a guest with us. We are very our listeners will be very happy to hear what you have to say on NIF.
Thank you, Arjun, for inviting me. It's a pleasure. One of the mandates for us as an institution is corporate bond development, and would be happy to share certain insights on NIIF Infrastructure Finance Limited with the market participants and the corporate bond investors.
Sure, Amit. Yeah, can you start off explaining about the structure of NIF? I mean, how is it run? What are the shareholding? What are the in terms of what's the exact mandate of the whole entity?
Yeah. Yeah. So, Arjun, I'll split it into two parts. The first one was we are registered with Reserve Bank of India as Infrastructure Debt Fund NBFC. This was announced in the Union Budget of 2011. Honorable Finance Minister announced setting up of IDF NBFCs. It was done subsequent to Deepak Parekh committee, who recommended setting up of newer vehicles for financing infrastructure in India. So government announced that IDF NBFCs as a class of new vehicles to finance infrastructure. Now, these are basically refinancing entities which are safe vehicles. Uh, the mandate by RBI is very simple, one line mandate to finance stroke invest in satisfactory operational projects which are having COD +1, commercial operations date plus 1 year of satisfactory track record. So that is the mandate to us. This was us. This company is majorly owned by NIIF Strategic Opportunities Fund, directly 40%, and 30% through their another NBFC called ASEEM Infrastructure Finance, which is registered with RBI as IFC NBFC. This is as per regulation that we need to have a sponsor. So ASEEM is our sponsor. We have Government of India who came in as a part of Atmanirbhar 3 announcement, and there is 25% direct equity holding by President of India, and 4 odd percent is with HDFC Bank, erstwhile HDFC Limited. So this is our broad shareholding. We are a specialized institution. We have uh, three differential points, or three differential way of looking at it. Is we are the only entities who don't pay corporate income tax under Section 10, subsection 47 of the Income Tax Act. Number two, we can only do the infrastructure financing business of projects which are having at least 1 year of satisfactory COD plus one satisfactory operations. And C, we can only borrow through the bond markets, that to minimum 5 years. There's a 10% limit below 5 years, but we randomly use that requirement just for some ALM gaps, matching ALM gaps. Otherwise, we stay away from short-term borrowings. We are not allowed to
Correct.
have bank lines or any of that kind of stuff there. Uh, that's the basic uh, structure of IDF, NBFC, and our shareholder. Something more about our shareholder. Our shareholder was set up in 2015-16 budget speech by the then Honorable Finance Minister, Mr. Jaitley, making this as the first quasi-sovereign wealth fund of India. I use the word quasi because government has capped its shareholding at 49%. And there are marquee names uh, as partners in the NIIF. Some names are ADIA, Temasek, CPPIB, Australian Super, Ontario. There is a long list. These are the, and some Indian marquee institutions like HDFC, ICICI, Axis, Kotak are investors in the NIIF platform. NIIF has majorly three funds. They have launched one more fund recently with JBIC. The first, there are one is the master fund, second is fund of funds, third one is strategic opportunities fund. From where they have invested in our company. And I would say strategic opportunities fund is a long-term fund where the strategic focus of government is there. So that's where they have acquired stake in us. And we uh, we are into the process of scaling up the business. And the government has given us 6,000 crores of equity between NIIF, IFL, and ASIM, out of which close to 2,000 crores, roughly 2,000 crores, has been uh, drawn down. Rest 4,000 crores, as and when we do the business growth, leverage, whatever you want to call it, will request government to put in additional equity. But it will be in
Sure.
such a way that this enterprise remains a private sector enterprise, strongly supported by Government of
Government
India.
of India.
They don't want any government nominees on the board. Till date, there is no government nominee on the board.
Right. So basically, you're allowed to operate uh, with the freedom under the mandate of
Yeah.
what the government wants in terms of capex
Yes.
for infrastructure growth and the whole development. So can I equate you to say NABARD, or I mean not regulatory in that sense, or NHB in terms of refinancing activities?
Mhm. No, they are different entities. See, because they get the annual support from the budget levels and those stuff.
Right.
They are pure. The balance sheet is on. I'm just giving you an example. If a bank refinances itself from Exim or NABARD or NHB, the risk is on uh, the bank itself. Here we buy out the assets. They don't buy out the assets from bank. They just
Okay.
refinance it.
Hmm.
Here we
Okay.
buy out them. It's in on our books.
Okay. Now, is it, do you mostly do that in terms of a direct buyout, or could you also be investing in, for example, say in bits? For example, that's
No,
one way of. investing in infrastructure
No,
through
so we
a.
are not, as by regulation, we are not allowed to lend or stroke invest in InvITs. We are purely senior secured lenders as per the mandate today.
Fair enough. So this makes you a very, very strong, I mean, highest quality credit in the country, right?
Yes.
And you issued a 5-year bond recently at 8.08%, which
Yeah.
is comparable to, any of the PSUs that come to the market to raise, and at very
Yeah.
fine spreads to the GOI as well, right?
Yes. Hmm.
Now, in that sense, what is the total outstanding issuances you would have in terms of the bonds that you have issued?
So as we speak, outstanding listed bonds are close to 18,000 crores, a little less than 18,000 crores
So, which
as we speak.
which makes you one of the largest bond issuers in the country next to the government of India, and apart from
Yeah,
some PSUs, right?
yeah. So on the IDF front, we are the largest today, outstanding IDF NBFCs.
Sure. Okay. And now, what is the holding pattern of all these bonds? I mean, are they mostly into long-term investors like PFs and insurance companies, or do banks invest and do mutual funds invest and do traders start to trade in these bonds, etc.?
Yeah. So this being above 5 years, uh, 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 close to 50% is held by the retirement benefit funds and insurance companies. 40 odd percent is by banks who keep on churning here and there a little bit for their DCM businesses. And some large banks have also, taken trading bets out there. And the 10% would be with mutual funds, corporates, individuals who have been picking it up from the secondary market.
Secondary market, right?
Yeah.
And what would be the average maturity of your total issuances? And what would be the longest maturity bond you've issued?
Today, 10 years, but we are in process of going up to 15, 20 years. Once the balance sheet becomes more and more durable, or whatever, it's more and more seasoned, we would like to go long term. And now we also have borrowers. So matching the ALM also becomes easier for us as we grow our business. Certain borrowers have come to us who want to lock in for 15 years. So we are in process of taking it forward, raising 15, 20-year money and lending 15, 20 years fixed.
Right. Okay. So you're a classical long-term development fund now, where
Yes.
all the banks lending actually, which results in ALM mismatch and infrastructure, whereas
Yes.
for you it really doesn't result in an ALM mismatch, right?
Yes.
Having said that, now in order to the two is that given that you are a long-term investor in terms of long-term issuer of bonds, given that
Mm.
your assets are also long-term, and there is a dearth of long-term direct savings for retail investors in the market, right?
Okay.
Now, if they want to invest in, say, a 20 or 30 years bond, they have to go to either GOI or
Yes.
otherwise they don't find anything else that is really
Mm.
available. Okay.
Mm.
Now, is there any plan to come and say do a public debt issue of a 20-year, 30-year kind of a bond for capturing retail savings in the economy?
So Arjun, two part answer to it. The first one is section 2 subsection 48 of the Income Tax Act. As well, NABARD used to issue bonds, NABARD Bhavishya Nirman bonds. The same approval has been given to us to issue long-term zero coupon bonds with some tax benefits of long-term or short-term, where you don't accrue your income. So
Okay.
we are in process. This is a union budget announcement. There was a technical glitch on the CBDT portal. Now it has got resolved. So we are in process of applying for it. We will test the market with small amounts and shorter duration. Minimum I have to issue here is 10 years and maximum 20 years. So depending upon the CBDT approval, whether I get for private placement or public issue, I'll have to do the needful as per the CBDT notification. So that would be a long-term bond with tax benefits available in 3 to 6 months' time for the retail investor. That is point number one. Point number two is uh, we are in active discussion with bond houses like INR bonds to distribute our bonds, smaller lot sizes, to the retail investors. Public issue, we have yet not got the thought process moving on. If required going forward, yes, we are open to the idea, but not on under the active consideration in next 3 months.
Sure. Point taken. A couple of advantages of a public issue is that one is it enables very small investors, say somebody who has 10,000 rupees, who can
Yes.
invest in the best quality bond for
Yeah.
long-term savings. And if that's
Mhm.
giving them tax benefit, it's even better for them, right? Because of the lack of options available at this point of time. The
Yes.
second is, yes, we would love to distribute your bonds in terms of now with the face value private placements at just rupees 1 lakh. It's very easy to distribute out. But
Yeah.
having said that, we don't see too many bonds come into the secondary market, largely because your own investor base is very, very strongly anchored towards buy and hold investors, right? So
Yes.
in that sense, any way that you think NIIF and bond industry can work together to make it more tradable, make it more if anybody wants to take, for example, if we it's a good there is a feeling that it's a good time to take interest rate bets for the next
Yeah.
2 to 3 years, right? Long-term
Yes.
bonds can be very strong because of all the inflation fighting going on. 10-year
Mm.
and 30-year bonds are at uh, higher levels, and technically we have seen that from these levels they tend to come down over a
Mhm.
longer term period. And so if NIF bonds can provide an avenue for
Yeah.
investors to take bets, basically we have zero credit risks on NIF, but
Mm.
purely interest rate risk. And if there's enough
Mhm.
liquidity provided,
Mhm.
then there could be a lot of interest in the trading itself in the such kind of bonds.
Yeah. So, Arjun, a couple of quick things out here. We are in discussion with a couple of banks to, be more active on our bond platforms, on our bonds, providing liquidity to platforms like you. Because see,
Sure.
we technically, under the SEBI guidelines, won't be able to provide the trading window as a company, right? So we've requested certain banks to be active voluntarily. That's one point. The point number, it all depends upon their view at that point in time. That's one. A couple of PDs have started market making for us. We are in discussion with other PDs also to actively churn the portfolio in our bonds. The number three, there was a discussion, informal discussion, where SEBI is thinking of further reducing the face value to 10,000 rupees uh,
Hmm.
for the face value from 1 lakh rupees. So that should also help. Fourth point that I would like to make here is today also there are a lot of retail investors who have bought bonds from a couple of bond platforms, who have bought it from banks steady state basis and invested. Uh, this is one of the very few companies, as you rightly mentioned, we till date have nil NPA history. This is the ninth year of operations, or 10th year, I would say, of the operations of the company. And we have had a pristine track record of nil NPAs since inception.
That's fantastic for an infrastructure company. And
Yeah.
in terms of foreign investors,
Mm.
your bonds can be invested by foreign funds.
Yes. So, Arjun, a couple of points out here. If foreign investors are very much interested, we have started the initial work with a couple of multilateral agencies, because close to 60 odd percent, close to 65% of the book, it keeps on varying month on month because of the new business that we do. But having said that, close to 65% of the book is to the renewable sector. And we have adopted, as a good corporate citizen, IFC performance standards on the ESG space. So this is since 2019. Any lending that we do has to have covenants related to the ESG green framework.
Right.
So we
Okay.
are discussing with a couple of multilateral agencies on incorporating the green bond framework, which would further enhance the liquidity in the secondary markets and primary markets both.
Okay. That's very interesting, Amit. I'm sure because given that so much of impact investing is going on around, especially by very large wealth funds globally,
Yeah, yeah,
then um, it's a matter of time before there's a lot of favor with for NIIF bonds from global
mm,
investors, which again
yes,
adds to the liquidity in the bonds because you always have a wide investor base, both domestic and global. And now with India being included in the global bond indices,
yes,
right now it's sovereign, but then it's a matter of time before other bonds get included. I'm sure one of NIF will be one of the bonds that definitely gets included, given that it's
yes,
such a large issuer of bonds and
yes.
floating stock is very pretty high. So with
Mm-hmm.
all that put together, we should see a lot more trading happening, and especially the fact that you're working with market makers who can
Yeah,
provide liquidity. And if that's 10,000 rupee face value talks of SEBI comes true, and in
yes,
fact, SEBI is very keen. One of the reasons why they brought down private placement to face value to 1 lakh is for them to start trading on bond platforms like INR bonds for
mm,
more individual and retail investors to invest. If it's even
yes,
lower, then I'm sure it can see a lot more trading interest and become one of the mainstays in the bond market globally. Um,
yes,
and also with such a large mandate in terms of development of corporate bond market and
mm,
with electronic platforms coming through and a lot of regulatory and electronic trading work going on from the exchanges itself. Put together, I think NIF itself can, help deepen and widen the corporate bond market. Yeah.
yes. Yeah.
Um,
So, Arjun, a couple
any
of points out here for all your investors. All the investors, basically, there are very few wholesale institutions doing business in India left, like us. There are other large branded businesses who do the retail financing part. There are very few who are in the wholesale financing space. I would not say more than three, four currently operating in the country. So, the whole point here is we operate in a very different business segment. We don't operate in the retail segment, and would request all the investors to see us in that light, that we have the expertise of the wholesale finance business and not the retail piece, because whatever media today covers is only retail financing. Wholesale financing media generally doesn't cover. And any
Absolutely.
doubts
Ab-
any investor has, we are happy to clear the doubts.
Absolutely. In fact, as a diversification strategy, it makes a huge amount of sense. Um,
Hmm.
and also, like I said, if you can give the option of long-term savings and, if you're this bond, the zero coupon bond you're looking at, which has tax benefits, all that will definitely add on to the savings potential of the investors. And
Yes.
given that it can all be done through bond platforms like INR bonds, we're very happy to showcase and educate investors on the strong bonds available for investments, for diversification, long-term savings potential, and liquidity as well, which is very important for any bond market.
Yeah.
Any parting thoughts, Amit? Anything that you would want to share and discuss?
So this is, as I said, this is a wholesale institution with qualified people. This is kind of a public-private partnership enterprise, not exactly the definition of Department of Economic Affairs, but yes, it's a public-private partnership in true sense, where the employees are all from private sector who understand the risk of doing this wholesale business very well. And we have demonstrated in our asset quality and in ALM, managing our ALM and the liabilities very well. I keep on telling investors we are a cricket loving country. So three things needs to be managed well in a wholesale kind of an institution. Betting is assets. We have close to 135 odd loan accounts. Liabilities is bowling. We have close to 225 odd unique investors in our bonds, majorly being the retirement benefit funds. And C, ALM, which is the fielding. So we have taken care of all the three very professionally and intend to continue in that fashion for the long term, making our platform one of the safest platform for investors.
Absolutely. And one fourth point, which I uh, am a strong advocate of, is access to liquidity, which I think for NIIF is absolutely no problem. And
Yes.
given that you have said we are a cricket loving country, let's hope we win the World Cup going on. Yeah.
Yes.
So with that, thanks, Amit, and thank you for coming on to our podcast, Let's Talk Bonds. We aim to take bond markets, educate investors through various interactions with various different market participants and uh, different personalities in the market who can actually, add a different sense of perspective and, all that. So thanks again, and look forward to having you more on the platform.
Thank you, and happy to come on if any specific investor queries are there to come on call and solve the queries.
Absolutely, Aman. Thank you.
Thank you.